Hello and welcome to the BizNews Breakfast Briefing. I'm Lucy Ferreira for BizNews.com. Alex starts us off today with a wrap-up of last week's markets, especially unpacking what the shock US job numbers released for the month of July mean from an economic point of view, and how this impacts stock prices. Alec also sums up the week in winners and losers and shares his stock pick favourite with us, explaining the fundamentals that have informed his choice. After that, we hear from our partners, the FT in London, with their daily global news update. And then we have some cracker new interviews for you on BizNews.com that came out over the weekend. We spend time with investing genius Cy Jacobs of 361 Asset Management for a masterclass lesson on his investment strategy, as well as views on ABSA and Naspers, to name just a few topics that were covered in this half-an-hour interview. We also hear from Makashula Gane, a lifelong politician, on why he resigned from the DA with immediate effect last week. It's also worth checking out the most popular piece on BizNews history, on R.W. Johnson's book, How Long Will South Africa Survive? And why it hasn't got much time left. You can find the links to these pieces in the show notes, or head over to biznews.com to find them and so much more. But for now, it's over to Alec with today's market update.
Thank you, Lucy. It's Monday, the 8th of August. Well, markets are pretty much as they were on Friday, ending a good week, generally speaking, with the Nasdaq up by 2.25% and the S&P 500 index up by 0.5%. On Friday, though, the S&P was down by 0.2% and the Nasdaq down by 0.5%. So, as often seems to happen, Fridays are the best days, actually, to go into the market and buy shares. The news that shocked everybody, or certainly the economists, was that the Labor Department announced on Friday night in America that the US had added 528,000 jobs in July. Economists had expected the number to come out around about 250,000. So it was hundreds of thousands more jobs than had been anticipated. It's also shutting up those who are saying that America is going into recession, because the unemployment rate in the United States is now down to 3.5%, which matches the all-time record that was set before the pandemic. Indeed, all the jobs that were lost in the pandemic have now been recovered in the United States. That got the markets into a little bit of a tiz. Investors not knowing whether it was good or bad. They started off by thinking it was really bad. Share prices took an awful hammering in the beginning, thinking that the Federal Reserve was going to jack up interest rates even more aggressively because the economy hadn't cooled. But then they started thinking it through a little bit more, and the consensus was, if the economy is not in recession, then why would share prices fall? Because share prices fall when profits get hammered. But profits won't get hammered if you're creating jobs and the economy is actually doing okay. And as a result of that, the share prices on Wall Street came back towards the end and ended, as you heard earlier, almost at break even. Here in South Africa, the JSE All-Share Index was up by 1.25%. The Rand lost a bit of ground against the US dollar, 17 cents lower on Friday night at 16 rands and 78 cents, lost 5 cents against the pound to 20 rand and 22, and 8 cents against the euro at 17 rands and 8 cents. That's what it'll cost you to buy a single euro. Brent crude went into the weekend a little bit higher, $94.92, but it's been a really good week for motorists if you consider that Brent was over $100 going into last week. The gold price gave back some of the improvement that it had towards the end of the week. On Friday, it lost $26 an ounce to $1,775. Bitcoin remained solid. That's at $23,224 per Bitcoin. It was up by 0.5%, and that translated in the Geltec basket, which also caught up a little of the earlier Bitcoin improvement, closing the week at 4% higher at 451 rands and 64 cents. Well, for us, the big news coming out on Friday was from Cloudflare. This is my favorite company. I've made no bones about that in many of the webinars that we have held over the past few months. What happens is that we've got two model portfolios for BizNews Premium clients, And the idea there is to show them some of the stocks that are listed in America primarily, because it's exponential shares that we're looking for, and then to explain on a month-by-month basis what has happened to those companies. The Shift portfolio is quite personal to me because I have my own money invested there as well. And my favorite share in the Shift portfolio, indeed my favorite share on the whole stock market, is Cloudflare. It's an internet security company that we use. It's a fantastic business and one that is dominant in its space in the world in an area which is booming. Anyway, that didn't seem to make any difference as far as Mr. Market was concerned. Cloudflare's share price was at $200 a share back in November. It actually came back to $40 a share as recently as mid-June. It's been bumping up a little bit over the past few weeks, but on Friday we had financial results from Cloudflare which showed that Mr. Market has got it all wrong. The revenues for the second quarter grew by 54%. Now that's really massive exponentiality, and the share price went up by 27%. There was good news for Cloudflare on pretty much every front. They've added 212 new large customers, taking the large customer base, which generates 60% of their revenue already, to around 1,750. The CEO and founder, Matthew Prince, said that these companies are now leaning forward towards Cloudflare on how we can help them to reduce their IT complexity, to secure their businesses better and save them money. And that's really what Cloudflare is all about. It's a security business online. I've used it at BizNews for some years now. We've had attacks from all over the place. The Russians, the South African government, or so we thought during the Zuma era, companies that didn't like what we've written about. And every single time Cloudflare has stepped up to the plate and been able to see off these hackers, which in some cases were paid a heck of a lot of money to come at us. If they can do that for us in the little amount of money that we're paying, can you imagine how good they must be for the big companies? What I really liked about the results as well, it doesn't matter what I liked, but the market really liked about the results. There's a net cash flow year on year went from $7.5 million to $38 million. But more than that, they're sitting on cash. They've got cash holdings of $1.6 billion. And their free cash flow is just about break even. So this is one of those companies that's growing rapidly, has got plenty of reserves. It's not losing the kind of money that means it's going to have to go and knock on investors' doors and say, give us more money into the future. That's why I love it. Our entry price on the Shift portfolio was $102 a share. The share price, what was it, $40? So it was our worst performer, which is a bit embarrassing if you say it's your favorite company on the market. But anyway, the share price is now back to $74. And like Palantir, another one of our favorites, which we fortunately bought into much later, it's built for tough times. Okay, there's the Cloudflare story for you. Outside of that, good week for Amazon, one of our other favorites. That was up by 4.5%, even though it did come down slightly, 1% lower on Friday. PayPal was up 10% in the week, and Nvidia was up by 4.5%. Tesla came back on Friday by 6% after that real good run earlier in the week when it announced that there would be a 3-for-1 share split. In the Johannesburg Stock Exchange, one of our favorite stocks there, although it's not in the portfolios, I'll be watching it though, ArcelorMittal was down by 12% in the week, Kumba 7.5%, Sappi 6%. The winners, MTN 4%, Standard Bank 4%, Investec 4%, and our good friends ABSA are now up at 178 Rand per share. They were up by about 2% last week, gaining 1.7% on Friday. ABSA is in the BizNews portfolio. Well, that's it. Your wrap-up for the week. Look forward to being back in your company again on Wednesday. We're taking the day off tomorrow. It's a holiday here in South Africa. I hope you enjoy your day as well. Cheerio.
Good morning from the Financial Times. Today is Monday, August 8th, and this is your FT News Briefing. The global stock sell-off is having a knock-on effect on private markets, and top gig economy companies like Uber are making more money than ever. Plus, the FT reports that when more than a dozen female Apple employees reported misconduct to HR, their claims fell on deaf ears.
Apple's immediate concern seems to be, is this going to hurt Apple?
The FT's Patrick McGee will tell us what happened. I'm Mark Filipino, and here's the news you need to start your day. Over the past decade, low interest rates encouraged pension funds and other big global investors to pour money into private capital, like buyout firms, venture capital, and real estate funds. They were looking for higher returns. But in the first half of this year, research shows these investors sold $33 billion worth of their stakes in private capital. That's up from $19 billion during the same period last year. Here's the FT's Kay Wiggins.
So I spoke to the head of private equity at one pension fund. His pension fund has sold down some of its private equity stakes at a discount. And he sounded pretty dejected about it. He said, "We've never had to do this before. We hoped we would never have to do it." And crucially, he also said that they were going to reduce how much money they would commit to new private equity funds, both this year and next year.
Okay, what does this mean for pension funds and sovereign wealth funds and other funds that invested in private markets?
So in the immediate short term, the effect is that they're selling out at a discount. So they are expecting now to bring in less money for whether it's for their pensioners, whether it's for the governments whose money they invest. They're expecting to bring in less money than they would have done if they had held onto those stakes. And by selling at a discount, you're saying we'd rather just have some cash available now and we can do other things with that money rather than make potentially more money, or at least what the private equity firm itself says would be more money in the future.
Now, there's been a $33 billion sell-off in the first half of this year, as we mentioned. What does it mean for private equity firms? Can't be good, right?
So the biggest way in which this is a problem for the private equity firms is actually about what it says about their ability to raise funds in the future. Because if you think about it, if pension funds and other investors are saying, hang on, we want to pull out money that we had committed for 10 years, then that tells you that it's very unlikely that they're going to be continuing to allocate such huge sums of money to private equity firms in the future. If they've not even, if they're trying to get money out, then it's likely that they'll also be putting less money into the next generation of private equity firms. And so what that means is that private equity firms, venture capital firms, are going to have a much harder time raising the types of mega funds that have, over the past decade or so, been really pretty easy to raise and which have propelled them to become a kind of huge force in global deal making and to make a ton of money in management fees. And all of that is looking much harder now.
Kay Wiggins is the FT's private capital correspondent. Remember how huge food delivery was in the worst days of the pandemic when we were all stuck at home and afraid to go out to eat? Well, pandemic restrictions have receded, and it turns out food delivery is still huge. That's one reason companies like DoorDash and Uber are making a lot of money right now. Here's the FT's Dave Lee.
Generally, the story is from these companies that as we open up, parts of the business that had suffered during the pandemic are coming back, and then parts of those businesses that excelled during the pandemic are sticking around.
So Uber, DoorDash, and Lyft have all just reported really strong earnings for the most recent quarter. Uber had its first ever quarter of positive cash flow, which means more money in than going out. But not only is demand strong for these companies, their prices are also going up.
We are seeing this shift from this era where they were happy to make a loss on rides in order to get the growth in the service and worry about profits later. Well, we're now in later. This is the later. And I mean, if you compare even just sort of prices pre-pandemic to where we are now, you can see the average price per mile on Uber has gone from $2.32 to $2.83. The average price per mile on Lyft has gone from $2.14 to $2.67. But it does seem that the era of the gig economy making things cheaper for millennials like me and you seems to be over, unfortunately.
And there's another reason these companies' earnings are stronger. Dave says they've become more efficient and pulled back on a lot of things.
Uber used to have a self-driving division. They got rid of that, sold that off. I mean, at one point, Uber was even trying to look at a flying car, for crying out loud. So now the investors are saying, how about we don't spend so much money? We're seeing hiring slowdowns. We're seeing hiring freezes in some case. We saw that at Lyft. Companies are budgeting like any person would. They're just making sure that their numbers add up by saving where they can.
That's our San Francisco correspondent, Dave Lee. For much of the past year, the FT's Patrick McGee has been speaking with more than a dozen current and former employees at Apple. They worked in different divisions in different states, and they all say they were harassed, mistreated, or even sexually assaulted. When they went to Apple's Human Resources Department, they said they hit a wall.
Apple treated the claims as, what's the risk to our reputation here?
Patrick joins me now to talk more about this story. Hey, Patrick.
Hi, Mark.
So one of the women you spoke to had an awful story, right? She said she went out for platonic drinks with a colleague one evening. She ends up at home, she falls asleep, and she wakes up to find him snapping photos of her with her shirt off. He had taken her shirt and bra off. She eventually reports this to Apple's HR department. What happens next?
Yeah, so she went to HR and she wasn't asking for him to be punished or anything like that. It was actually years after the fact, and it was after the Me Too movement. And she literally just wanted to give HR a heads up. But the conversation really turns rigid and defensive, wherein Apple's immediate concern seems to be, is this going to hurt Apple? And so they say to her, quote, as an Apple employee, he hasn't violated any policy in the context of his Apple work. And because he hasn't violated any policy, we will not prevent him from seeking employment opportunities that are aligned with his goals and interests, end quote. And right, she's just flabbergasted by this response. Like, there just seemed to be this tin ear when it came to like empathy.
So Patrick, you spoke to 14 other women, 15 in all. What was your broad takeaway from their stories?
Yeah, so the common thread when these women went to HR was that they lost their job, months later, ostensibly for something different. They didn't feel at all that they had the right, even though it's a legal right, to speak about workplace harassment and discrimination, to go public. You just got this sense over and over that no matter the geography, no matter the department, if a woman had a particular claim of misconduct against a colleague or against a manager, Apple's HR department was more interested in burying it in protecting the manager rather than truly listening to the employee.
How big of a problem is this, Patrick? I mean, you talked to 15 women and Apple has more than 150,000 employees globally. Is this a pervasive problem?
Yeah, I mean, I don't think Apple has a pervasive problem here. I think they have a distinct problem. I'm not saying Apple's whole culture needs to be overhauled or something like that, right? Like, Apple's top leadership and Tim Cook, I mean, they win various awards, and I'm sure they deserve to. But again, this is a massive organization. And when you go 6 levels deep in the organization, where managers are not household names.
What about culturally? Is there a larger cultural problem at Apple?
So you're absolutely homing in on the most important thing that I had to deal with in my reporting, which was that what became really meaningful was to speak to a former HR professional at Apple who talked about the dark sides, as he called them, to Apple's secretive culture, right? Apple has a famously secretive culture. It doesn't want you to know what the next iPhone is going to look like. But the broad claim from lots of people is that they've extended that shroud of secrecy into areas like workplace harassment and discrimination. And so women having a problem with their manager, for instance, had a natural tendency to think there was something wrong with them, right? Rather than a problem with managers at Apple and training processes. And maybe I should point out, Apple, in responding to these allegations, has pledged to change its training and processes as a result of the article. And, if that's a genuine statement, right, then one should feel encouraged by that.
Patrick McGee is the FT San Francisco correspondent. Thank you so much for your reporting, Patrick.
Cheers, Mark.
You can read more on all of these stories at FT.com. This has been your daily FT News Briefing. Make sure you check back tomorrow for the latest business news.
And that's all from the briefing for today. If you enjoyed this episode, follow BizNews Radio now to get all of our interviews and daily market updates as soon as they're published on your podcast platform. Bye for now.